Good afternoon, good morning, evening for Phi, because I know he's in UK time. We international, baby. Y'all keep that in mind. Figo is like
Yo,
UK.
international.
Yes, we international.
UK baby.
Yes. So, what I thought I would do is, I guess, do that what I normally do, and then I could just like pass the screen over to you, Phi, so you can
Cool.
share and do, let us know how you smacked Spy on
Yeah, cool.
Friday.
Sounds good.
All right,
Yeah,
and
yeah.
then we'll go to Kiki because I know she got some stuff for us. So, all right, I'll get into this. Spy is going to be brief this week for the most part because what I really just wanted to point out is like last week we were here when we talked about it, and I talked about this downtrend resistance right here, and I talked about also how it keeps going down. So I was saying, oh, we might rev strat in here. We obviously didn't. So noticing that we're continuing to go down for whatever pop we get, that downtrend resistance line is going to come down. So I was mentioning, oh, we may get up to 372, 373 before we got shorted down because, just understanding exhaustion. I did miss that there was a PMG on a day. So, I mean, that kind of makes sense as to why the price moves so fast. Also, with algos buying here, and it just, that was historic, actually. I had tweeted $40, but it was really more like $20. But it was insane for it to have dropped so much and then recovered all of this, plus taking out all of these stops. But, one thing I do want to also point out is that knowing that it moved this much, you know that there has to be some type of correction. It has to. Like, the price just moved too fast, both through here and just coming back up. So, I mean, yes, we did have a PMG here, but knowing that it came all the way from down here, you knew that it had to have some type of correction. Now, it did hit the 370 to the nose and it started to correct. This is the prime like outside day trigger, but knowing how huge this candle is, we could really expect that it really won't go more than half of that in one day, just because this was really an anomaly. So we could expect for it to do this, and now I'm expecting for it to 3-2 down rev strat and come and actually iron out this price down here because it just moved too fast down here. So as you can see, I want to zoom out a little bit since I'm on the day, but this head and shoulders that I showed y'all up here before, we have it down here again, but because price just moved so fast right here, it just had to come back up to really kind of create that shoulder. But now we still have a head and shoulders on the day. So I am looking for it to come down and try to iron out this area or even take out these stops. So yeah, we may see um, this actually happen in during intraday, not bounce there and take off. So I'm expecting for it to come down here. Now we are in the middle, smack dab in the middle of this broadening formation. This three is a broadening formation in itself. So that's why I said I really do expect for it to come down and take out these stops down here. It could also open up inside. It could do a couple of things, but just understanding that we went from top to bottom, exhausted, and then we came back in. So, but also noticing the same downtrend that we're in. We pop and then we come back down, pop and then we come back down, pop. It could just continue that until it actually breaks this cycle. So, looking at it on the quarter, the quarter low, we're sitting there basically. That's why I do kind of expect it to go ahead and take this out. Well, you know, go down. We already went through it before, but like I said, we went through really fast. So, um, same thing, quarter low, monthly low. And then the week, you can't really see this really well because of the broadening formations, but this is a wick, so it's a shooter. It would be a 2-2 continuation play it, but just understanding, who's in control. It's moving up, but every single one of these candles have long wicks. So we know still who's in control. And also remembering that under 380, it's a bear market. So as long as we're staying under here and Apple is staying under that outside year trigger, we can expect to continue to go down. And so, another thing that's been said is the sharpest rallies occur in bear markets. Yeah, we're in a bear market, and this is the sharpest rally I think we've ever seen. So, well, I know I've ever seen in my 3 years of trading. So that's SPY. I said it was going to be quick, and it was like 10 minutes. The Qs look similar. I did not update this broadening formation. So it kind of did the same thing. I thought the Qs and Apple were going to go for this gap. Now, Apple did get close to the gap, and I'll show that in a second. But I figured if it was to break out, it would go for the gap because that was the next resistance. But it really didn't have enough gas for that, especially after dropping and coming from all the way down here. So same thing. It's not quite as drawn out as SPY, but it's in that same downtrend. You can see the pattern here. It comes down, it comes back up, it makes a H. It comes down, it comes back up. Can expect it to possibly make an H. So on the quarter, it's the same thing. We actually believe broke last quarter. Yes. Yeah, so we're currently 2 down on the month, but we've hit that first target. And so we have the next monthly target would be 247. It's interesting though because yes, Qs are still 2 down on the year. This would be my first support for it here at 232, which we could definitely see with Apple going down. I mean, that's only this $30 from here, not even that. So it can definitely do that. And this is a year time frame here. We only have a few more months left, but it can definitely do that. So time frame continuity is red. Even on the month, we still have this head and shoulders here. So it's just everything is overall bearish. And everything honestly looks similar. Not everything, but a lot of things look similar with this 3-2 on a day. A lot of them had that 3 big green bar and then that big 2 bar. So, on the strat terms, we would expect the 3-2 reversal. Same with IWM. This broke a little bit more out of its downtrend. But honestly, I would just probably move this up a little bit. Showing y'all how I do that. So see, now it does look like it kind of found some support there, but at the same time, when you look at this resistance, it's still rejected there. So would expect this to 3-2 down as well. And even though things are at 52-week lows, that does not mean that they can't go lower, because we always zoom out and we look all the way to the left. And if you can't find anything, you just keep looking left until you find some more. Because SPY is actually at like 2020 prices right now. So had to kind of scroll way back to get the lines of support and things like that. So XLE. I'm going to get to ZOM and Oxy in a little bit. I wanted to show something, but they are all looking like this. Now, we had this 2 down, 2 up that triggered, but then they all came back in. So kind of eyeing them to see they're in an interesting place where they can come back and try to outside weak, or they could trigger back up and continue back up. One thing I do want to note is that it looks like it's on a downtrend. Well, it's like it can't break this right there. So I saw that with my eyes. That's why it wasn't really drawn out. But like just seeing, when it makes a higher high, okay, lower low. But can it break that? No. Okay, it came back down. Try it again. Couldn't break above here. Then this one couldn't break above. So it's on a downtrend. So this might, start coming back down. Then we have a little gap here to the downside, which, ZOM also has that. Oxy sort of filled it, but we'll get to that in a second. And then there's the VIX that we were looking at. Doji on the week, on the day. So interesting to see. Let's look at it on the week. It's not really, it's like not really a candle we can really count. But I would bet on the month. It's a little harder to see. Oh, we're still inside month. These broadening formations do that. And we're still inside quarter, which, Sarah actually pointed this out too. VIX has a triple inside quarter, which if you just look back, when has that happened? When has that happened? So, we know what inside means. Inside means that it's consolidation. Inside means that it's a tight range. And usually the longer the consolidation, the bigger the breakout. So, that's something we want to be aware of, that it's a triple inside quarter. So that breakout could be pretty big, which a lot of people have been looking for all year. And not happen until next year, since if this quarter stays inside, but it's wedging. So we'll have to see which way the VIX breaks. But yeah, for now, you can also notice that on the day it's making higher lows. So keeping that in mind, that means that VIX should continue to go up. It's probably going to stair step because it's respecting these EMAs for the most part, which means that SPY will continue to go down. So Apple, we still under the trigger for the outside year. So we're still looking for this 116.21. I am not quite sure it's going to make it all the way there. I have my buy order set at 120, but there's that. So, but I do think that it will get there, honestly. As you can see on the quarter, we're kind of mixed, sitting at the monthly, last month's low. That 140 level has been really, really strong for Apple. So it's been kind of, finding a really strong support there. For weeks you've seen it, we've kind of sat there. It's been hard to break. So interesting to see what Apple does. Again, it has that same setup. Now, I'm gonna go back to SPY really quickly because I do want to point this out. SPY, we uncoupled here. And so by here, we were full time frame continuity was red because we were under the week, the quarter, the day. And so here we moved up so fast that it flipped the entire time frame continuity green. And then on this retracement, we went right back red. So that's just really interesting and just, something to note that the time frame continuity is standing strong here. The bears are in control. Apple is a little bit more mixed, but that 3-2 that we have on the day, if it does like what almost everything possibly will and does this 3-2 down, that's going to turn the month right there. And did I not draw the quarter? The month and the quarter is the same. This is the quarter. 138.18. So it's almost there. Yeah, I had that a little. No, it was this week. Yes, that's right here. Yes, it was 140. And the month open is 138.16. Yes. The quarter and the month are the same. Yeah, so this 3-2 down on the day can actually flip this time frame continuity that's currently green fully red. And then, so that's what I'm looking at. And a lot of these things, like I said, look the same. Look at Microsoft. 3-2 up, 2 down. Now, this isn't full. It doesn't have the conflict of time frame continuity here. It's all in your favor. But just understanding, hopefully that helps you understand on how, if things go up, you can trade them back into time frame continuity. So, yeah, same thing with, Amazon didn't have a 3. So I guess it wasn't strong enough on that day to take this out. But it did this day. Took them out, came right back in. So time frame continuity is still red. It's not a 3-2-2, but it is a 2 up red. to 2 down. So if all these things, do that 2 down on Monday, we can expect that, simultaneously the market is going to do that. So I wanted to talk about Walmart. Walmart is being stubborn. It's like trading in this range. I was able to day trade it this week and do pretty nice, but I am still looking for Walmart to break this support. This 128, 129 area it's like holding on to it for dear life, but we have an inside week. So if we can finally break this area, then we can go ahead and trigger the monthly to come on down. So just keeping in mind, on the day, I'm noticing it's popping and dropping, popping and dropping. So when you see it pop and give this long wick and give a shooter, then you can most likely get it to trade it to the downside. Just remember this 128 area is a strong support, but if it can break it, it can break this range that it's kind of been trading in. It's trading in a range, but it's a downtrend range, so it's coming down. It's just taking its time. So I also wanted to note on the 4-hour that you can kind of see the pattern here of it rejecting when it has that wick above these EMAs. Could catch it to the downside. So this is one of my top plays. Still watching for next week. We've been watching it for weeks, but yeah, still watching it. McDonald's was one that Jamal had brought to the group. We were looking at it to the downside last week, but as you can see, it went crazy, which I love the strat because you're prepared for that either way. So congratulations to whoever caught that. I just did want to point out that we have this crazy candle and then we have this 2 like everything else. So if it decides that it does want to pull back or finish giving this back, then that could be possibly a play. I don't think it was a weekly. Well, it's a shooter. It ended up here though, so it's a green shooter. I wouldn't really count that. But if it did decide to come down, then it would be a ref strat, depending on how red we are next week. Snow was a beast this week. Snow came out the gate doing exactly what we wanted. It took off from here, 176 to 145. That was an insane trade. Like it was really great. And then once it did this, it actually gave entry again to get back in. Then gave entry again to get back in. So this was great. I did want to point out on the month, because we were looking at it on the month, it almost hit the target, but it may still have a little bit more gas to hit this 143 target. And then on the week, we were looking at it and just saying that we had more stops to take out if this decides it's going to H. But last week we said if it was going to H, remember we're on the weekly time frame, so this may take some time to do all of that. But we could target these now that it's made this corrective move and it looks like it's coming back down. So yeah, on the day, it's made its correction to this 8. It could still try to go for the 20 if it wanted to have some more gas, but it's rejected here. So I actually like this to still continue more downside because it's basically made that H. So keep Snow on your radar. 4-hour, 3-1 rejection. I mean, we had our solid move, the sideways action that I like. Retest because it gave the chance for these EMAs to come down and meet the price versus the price coming back up to meet it. And then now it's rejected. So keep Snow on y'all radar, y'all. That's a 4-hour gap, but there is a 4-hour gap down there. And overall, we just know it looks bearish. We haven't had a higher high. I'll come back to Qcom. So I just wanted to really quick go over the monthly setups that we went over last week and just kind of give an update on them. TTD has triggered. That was decent. It still has a little more gas to take out these folks over here. So that's something that you can keep on watch. It would be a 322 continuation though on the week. So, but again, that same setup, 3-2. 2 down. That would be your entry on the day, and then take it down for the rest of that move. Same thing with plug. It has done it's broken the support that it has, so still has a little more gas down here. It's just been going down. So Oxy, wanted to point out now, the script hasn't picked this up yet because it hasn't happened, but y'all know I'm always looking for these, mostly because the 50% rule happens a lot after inside bars. So if it takes out one side and comes back in, I'm always looking for it. I'm also conscious though of the fact that the 50% trigger is also a retracement for people to buy. So sometimes that's why it doesn't work, because people buy at that level, especially when time frame continuity is green and bulls are in control. So, and as you can see, for the most part, they are in control. So it may come down, but I don't know if that it would necessarily come all the way to finish this and make this outside bar, but it's just something that you want to be aware of. So the 50% rule is at 64, which isn't that far from where Oxy is at. And then it goes on the day. Yeah, we have that same setup where it's the shooter on the day. So, is this going to come down? Because it also could be like a sort of like an M. But is it going to come down and take these folks out and then come try to actually fill this gap? Because when you look at ZOM, even though ZOM had a PMG, if I'm not mistaken, somebody may correct me, because it didn't come all the way down, it's now negated because you have these. So it's no longer this PMG, but you can look at them as stops to take out, but you can't really call this a PMG because it's done this. So, but again, we have an inside day here with the shooter, one of my favorites. So if it does decide to come to the downside, this is the 50% rule on the month for ZOM. So a lot to go, but we're always ready for it. We just want to look and see what happens. It's also inside week, not a shooter, but as you can see, the bears, ended it pretty, I guess, under 40% of the candle or whatever. So if it 2-1-2 down, then you can see that ZOM might decide that it's coming down. It also looks like it's just sort of double top. Couldn't make a higher high here. So for sure, if it 2-1-2 down, you see that it couldn't make this higher over here. So we will most likely be looking for it to come down. So coin is still not doing a thing. Like, it's doing nothing. But again, we know that those usually means that at some point it's going to break out. It's probably because it's at its lows. But yeah, I just kind of wanted to update that. It's not really doing anything. Starbucks is the same thing. It's inside month, but it hasn't broken to either side, which, this is what Rob would call mother bar problems, which makes sense. But it also, we're noticing it can't break above here. So wick. So keeping that in mind, but it has an inside week. So if we can see it to break out of this area, this broadening formation, then, we can target either whichever direction it decides it wants to go. On the week, though, that does look like a cup and handle. Inverse head and shoulders. However you kind of want to look at that, it's a bullish sign if it can hold this and break out. So, but would like to see it to break out that range, because it's really not doing a whole lot of anything right now. And that's probably because it's trying to digest the move that happened from there. So it was moving really quickly for a while. We already talked about Walmart. And then lastly, I had Airbnb. Again, it's not doing much on the month. But on the week, was it the week or the 2 week I was looking at? It was the 2 week. Now we only have one more week left in this 2 week, but just kind of noticing where it is to see which direction, if it breaks out of them, out of that direction, which way is it going to go. We have that 3-2. So this is kind of a range it's stuck in. We just like to see it break either way. It has, since September, been making higher lows though. So keeping that in mind, it could definitely come down and take these folks out though. Because, overall, when you zoom out, it's not looking like it's going to hold up. So, yeah, I think this. Oh, I did want to mention these three. Only because a couple things. Okay, so this hit the 50% rule. But again, like I mentioned earlier, sometimes the 50% rule is also an area where people will enter back into their positions in the direction of where they were going. So for this is, if this is triggering the outside and you're thinking, okay, yeah, it might go up, but bears are entering right here to short again because it's the 50% retracement of this candle, that may be why this doesn't work out and it doesn't complete it. So that's why a lot of times you don't want to be the first in a trade, especially when it's, on a larger time frame. You kind of want to watch and see what it does. So this could come back down, but because it has that shooter on the day, but at the same time it could still continue. So I just wanted to kind of put that on y'all radar where it's at. It would need to break this resistance to continue going, but it's RCL. If travel decides it wants to keep going, because DAL, Delta Airlines, same thing. This 50% rule is in force, so it hasn't come back in, so it's a lot stronger. And because of this EMA, I actually think this could finish. Not quite sure though, because this has been a strong resistance. This 8 right here. So we would have to see if it would finish or if it would come back in. But it has triggered. And then Johnson & Johnson has also triggered on the monthly. But it's currently like sitting right there. So it's, again, the same thing. Like, is it going to come back in or is it going to finish? But we have an inside week that could kind of help. If it decides to break this 166 area, then you can look for it to go and finish the month. So that is actually all I have. I think Fi, you ready?
All right. So good morning, good afternoon, good evening, wherever you are. I'm going to talk through the SPX trade that I did last week. And I know in the group there was a few people saying they've given up on ICT or they don't quite understand it. Now, I've kind of been getting into it and kind of going down a rabbit hole, so I don't profess to be an expert, but what I have learned so far has been improving my entries alongside Strat. So I said it was like the Strat on steroids. So hopefully what I show you today, you can see how I got into SPX and how I was able to catch the move. Okay. So if we go to the micro E-mini S&P, which I'm on now, this is where the move started. But like Lala said before, you want to look left as far as possible and see what's going on to the left. So as I was watching the futures chart, we took out London highs. This was the London high where it finished. So the New York Open started, popped up. What I immediately did is drop down to a lower time frame to see if I could find an entry. In ICT, he talks a lot about targeting buy-side liquidity and sell-side liquidity. In Strat terms, that's basically targeting broadening formations. So if this is our top, you draw your line to the next nearest high, and vice versa. If you're at the bottom, you draw it. So it's basically the same technique, but slightly different. So if I just mark, So if I just mark here so I can find it on a lower time frame.
Whoa.
And if I just drop down to, I think I went into the 1 minute actually. Let me just, there we go. Oh, these broad. Okay. Sorry about this. Put that back up.
If you're looking for the mark, you mark back in August, not in October.
Huh?
I've gone too far.
Yeah, you marked back in August because you were on the dailies.
Ah,
For the mark.
right. Okay. Was Friday the 14th? Is that correct?
Right, I think you marked August 14th.
Yeah. Okay, but this is where I'm looking. Okay, so ignore where I'm at, but this is where we're looking. So if I just, you might miss a minute. Okay, so Lala touched upon it earlier on as well. You've had your higher high. So if we come back here, actually, let's have a look. So you have your higher high, higher low, lower high, lower low, and then you can see, pretty basic. If it starts to make lower lows and lower highs, then you're looking at a downtrend. If we come across to here, you have higher high, higher low, higher high, lower low, lower high, higher low, lower high, lower low, and come down. And then when you get from this higher high, once you can see the lower high and the lower low, that indicates a market structure shift. Because we weren't able to make a higher high, that's now a bearish signal. And as you can see with this indicator here, it's marked red, lower high, lower low. If I zoom in, can you see where it says BOS here? So that's an ICT term that says break of structure, which basically means it's a continuation to the downside. And what a break of structure is, it's basically if price starts to move above a short-term high and then it takes it out. Okay, so it starts to move above a short-term high, and then it turns around and takes out the lows as well. So if you see here, it's a bit bigger. So here was your kind of short-term high in this candle. It's come above it slightly, came down, and then it's taken out the lows here as well. Okay. But what gave me the most clarity was the lower highs and lower lows. So lower high, lower low, lower low, lower high. And what ICT will say, he says, once you've got your clarification, you want to wait for a TTO or a retracement into a fair value gap. And I've mentioned this quite a lot in the Discord where other members were struggling and getting chopped up or caught out with the retracement. So on this break of structure here, that was your first kind of indication back we're heading downwards. If you'd waited here, you get another lower low, and then this is where you're targeting this fair value gap for a reversal. So if you was going to use a strat, you could have waited for it to come up, two down, and you could have entered there. Okay, I actually think I entered about here. So we came down, we traced into there. I think I entered there. We popped down, came back up, and then we puked. And basically, that's all there was to it. I just looked at the higher highs, higher lows, lower highs, lower lows, waited for the retracement back into the fair value gap, and then let the trade do its magic. Any questions? Anyone?
I don't have any. That's actually, it's really interesting. So the break of structure, I like that it's in that indicator. What's the name of that indicator?
So it's called this one here. So it's market structure, BOS, CHOCH, MSB, FVG. It's the ICT one. So if you guys want to make a note of that, do you guys understand what a change of character is? Are you aware what it is?
I am.
Anyone?
I'm not sure
Yeah.
about everyone else, but I mean, since you can go ahead and tell everybody.
Yeah. So a change of character is basically what we know to be a reversal. So a break of structure is a continuation, whereas a change of character is where price takes out the highs and the lows and it signals a reversal. So if we look in your example here, taking out these highs here, so it came up, taking out these lows, down. What that basically means is that institutional buyers have stepped in and are waiting or willing to push the price down. Again, the good thing for us as retail traders is that you have indicators like this, which will tell you when the chalk, which is what it's referred to, is happening. So if you wanted to scalp it, if you wanted to swing it, you could have got in here, 2 down, you have your TTO, so you come down, your TTO, wait until the fair value gap, come down, and then let the trade just work its magic. And then if you was to come here and you get another break of structure, again, it's more confluence that the trade should keep going down. You come now, another chalk, a green one this time, so a bullish one. So this is where you're looking for your reversal to the upside. So it starts to make its move, retraces back in, there'll be a fair value gap here, and then you run. So it's always important to wait for the retracement rather than trying to get in here and expecting that move. You want to wait for the move, let it come back, and then go. Yeah?
Yep, I
So
love
if I go back to SPX. So this is the hour chart. Let's go down to a 15-minute. This is what I was actually doing as well. Actually, I looked on the 15-minute, got my my signal, and then that's when it dropped to the 1 minute. A lot of people who use ICT use sub 1 minute charts at entries, but the lowest I can go is a 1 minute. So if we look at an example. So here, this change of structure here, this chalk, it's we took out this highs here, we've come down, we took out the lows, okay? And then when you're coming back through the range and we take out these highs again, this indicator will show a bullish chalk, which gives you confirmation that you can run. So if you got this signal, you then drop to a lower time frame, whichever one's your preference, retracement back into the fair value gap, and then the trade would run. So that's how I played SPX on Friday. And what I also did as well, Lala, is I've got an indicator called supply and demand zones, I think it's called. So what you do is you pick your range, so that's one side. Okay, so the blue area is known as your supply and the other one's demand. If I can just try and give you a better look. So let's use this hour chart. If I just bring it in. Play games. So this mark to the left is too far. It's too far of a range. So let me do it. What I'm gonna have to do is manually change this. In this indicator that I just showed you, you can go in, you can change the supply and demand zones, you can change your colors, you can change your start calculations and end calculations. And I think it was Shay who asked me what indicators I use, and this is one of the volume profile ones I use. So if I just change this to say 1st of September. Press OK. Okay, so on the left, you have volume profile. Now, for those who don't know what volume profile is, the graded shade areas are areas of non-value. This is where the least transactions have happened. And if we talk about the market as an auction, this is where the least transactions have happened and where most people aren't willing to participate. Okay, so that's shaded in grey. And then you've got this blue line here, which is your value area high and your value area low. This is where most of the transactions take place. And you can see by the yellow bars, green and yellow, where the buyers and sellers were. When you have the kind of like mountaintops, if you was to turn your charts sideways, these can be like mountaintops, mountain bottoms, mountaintops, mountain bottoms. Generally speaking, when price comes from a mountaintop and you have this kind of, let's say, alligator jaw, where it's a big gap in between, price will rush through it. As you can see here, prices come down and rush through. It's consolidated again, and then we've got another gap, it rushes through it, and then it starts to consolidate again, okay? But from a supply and demand point of view, if price is in a non-value area, it has to come back to value, it has to, okay? So if you're up here and you can see price is in the shaded grey area, you can target the value area, knowing that that's where price has to come to. Similarly, if you're down here, look at this bar here. So we're right in the grey area, and it has to come back into value. Okay. The purple line, which is marked, is your VPOC or your volume profile. Sorry, volume point of control, and that's where the most transactions have happened. So if we was to look here, that's where the highest kind of spike is, and that's where price will always attract back to. So you've come from here, it's attracted to it, it's come away, it's attracted to it, it's come down, it's attracted to it. So when I was in SPX on Friday, this is another confirmation where you can see when we had the big move on the Thursday, I believe, and we've touched the bottom. This day, I could have made 10 grand, but my stop loss took me out. I was so fuming, so pissed. But you can see it's in the grey area. Okay, so it's tapped the bottom and it's run right back up to the VPOC, the volume point of control. Okay, it's come up, come back to the VPOC, and now we look like we're going to tap the bottom again. So we might get a bit of downside on Monday before we decide to bounce. We might come down further back to this area and then bounce back up. But from a supply and demand point of view, you know that it's always going to attract, magnetize back to your VPOC point of control. I think it was Mish who asked me in the chat last week, what was Bookmap saying? And Bookmap basically is the same thing as this, but it's just giving you real-time volume market buy and sell orders. But this is one another tool you can use, the market supply and demand zones, to let you know where price is, where it isn't. Yeah.
Yep, I love how that kind of coincides exactly with what I was saying too. You know, I saw that without seeing I guess the volume and stuff like that. I'll get the terms down, but seeing that it could just come back down through there because it moves so fast. Now it makes it click when you explain it like that, because I saw it in a different way. But yeah, I get it. I love it.
Yeah. Another thing I didn't mention was the volume profile candles down here. So this is what Shay was asking me about. So you've got your black line, which I think it's a 5 SMA. I think it's set. I don't think you can change it. I can get to this. Remember, but it's set, and basically you've got your bull, your bearish. Yes, let me just try and zoom in so you can see. The candles, as you can see, you have your bulls in green and your bears in red, and the bars split into two. So instead of having one green bar and one red bar, it shows the proportion of bulls to bears and vice versa. And you can see who's winning the auction battle there. So as you can see, we ended with a volume spike with the bears winning, which sometimes as well, I know Alex from Sarah's stat group mentions this, But when you have volume spikes, that can also signal a reversal. So we had one here, and we reversed back down. Had another one here, so that could be another sign we're going to reverse back up. May not do, but it's just something else that you can add to your arsenal. Now, because we're bouncing off this supply and demand zone, it can also be used as a take profit area as well. So you've come up, didn't get through, tried it again for the retest, didn't get through. So we've come down and tapped this zone here. Okay. If price tries to get through a zone and it rejects, the more times it tries to breach that zone, the weaker the zone gets, and then finally it will breach through it. But from my point of view, where I've been improving specifically is using the chocks and the breaker structures and waiting for the retracements into fair value gaps, because I've been guilty myself previously of trying to get in a trade too quick. And then you're chasing your contract then. Theta kicks in, IV kicks in. So just to be patient, just to wait for that retracement into the fair value gap. I mean, let's see if we can find an example. Here's a good example. So price comes up, it comes down. There's your breaker structure. It's taken out of that high. Now, you could get in here thinking it's going to run, but if you wait for it to come down, there's your fair value gap, and then it runs. Okay? And that's the model I've been using, which has been helping me kind of kill it last week. It's just kind of being more patient and understanding what a chock is. It's a reversal, and a breaker structure is a continuation.
Breaker structure is a continuation. Okay. Chuck is a reversal. Break of structure is a continuation.
Yeah.
Okay, got it. I'm gonna have to write that down.
Yeah. I mean, with the indicator as well, it kind of tells you. So if it's green, you know it's bullish. It's a bullish continuation. If it's a red chalk, you know it's a reversal down. So just by the colors itself, you can kind of identify what it's telling you.
I think I have it. I think I need to put it on my chart and actually look at it and do some back testing to kind of understand. But I see when you as you're explaining it how it works.
Yeah. And I think my trading's changed quite a lot, because I used to have like MACD, RSI, TTM squeeze, this EMA, that EMA, and now literally I can use the supply and demand zones, the Strat obviously, and a few ICT concepts now, and I don't really need any indicators really. So it's interesting how I personally have kind of evolved, and I've kind of now seen it in my results, especially with the SPX trade last week. But each to their own, whatever works for you, you know, you do what you need to do.
Oh, of course. Well, I appreciate that very much. Lesson. If I go with the gems. Did you have any thing that you wanted to look at or that you were looking at this week?
I had XOM, which is what you mentioned, got beyond on as a kicking bear pattern. So if we go to the daily.
Can you tell the folks in the back what a kicking bear pattern is?
Yeah, so it's you can kind of class it as a continuation, but it's basically where the low of this candle is lower than the previous candle.
Oh, okay.
So we would know it as obviously like a continuation pattern. But when you look at beyond here, the magnitude isn't great, to be honest with you. But it's just because we've come 2 down, and you can target this 1271 area. In the week, what was that in the week? 2 down last week. So if you get another 2 down continuation, and just something that popped up on one of my scanners, so I thought it may be worth a mention. You've also got the.
Go ahead. I'm sorry.
Oh, sorry. I was just going to say you've also got the confirmation of the breaker structure here, to see how it keeps coming down on the weekly. On the daily, let's see what's happening. So, high, low, higher, high, lower, high. So now if you get a lower low, you know again it's a BOS, it's a breaker structure, because we're going to continue.
Where is that thing gonna go? You know, Jamal has been telling us about Beyond for a couple weeks now, and it's just we definitely. I know I wasn't looking at it this week, but Where is it going? To $2?
It's going.
It's definitely going. It does not look like it's going to recover at all. I mean, yeah, that may end up being a penny stock soon.
I think I had eBay I wanted to mention as well. The only reason why eBay caught my attention is because it's taken out its relative highs. If you look left here, taken out its buy side liquidity. It's come all the way down. Now it's taken out its sell side. So one of the ICT models, the way it tells you to enter the trade is to, if sell side liquidity has been taken out, you then drop to a lower time frame. Let's say the 15-minute. And then what you're supposed to do, I'll just demonstrate it quickly. Okay, so then what you're supposed to do is find the low that took out the sell side. So that's your sell side. Here's the low, okay? And then what it then says is find the peak high before the low. So if that's the low, you're looking for the high, which is there, which immediately precedes the low. And then he says, draw a line from that candle to the first candle it hits on the right, okay? And then he asks you, is there a clear displacement? Has it been an energetic move? And is there a fair value gap there? So you can see there, them two candles, one is a fair value gap, and it's a huge move. So if I just put the FVG indicator back on, this can be a bit busy, so I apologize. But so yeah, so there's the first candle to the right. It's sitting in a fair value gap, okay? And then what you do is you get a Fib retracement from the low to the high. Oh, I've already done it, to be fair. There you go. To the high. And then if that first candle on the right is sitting at 0.5, 50% or less, take the position. So what price has basically done is come up. We've talked about the retracement. Remember, this is a lower time frame. So it's come up, it's retraced back down, and we can expect it now to go long. So that's why I've got eBay on my radar. I'm expecting it to go. If we get bullish sentiment on Monday morning, and I mark the targets here. But that's kind of why I've got eBay on the list. We've also got, let's have a look, I'm just giving it a look. So you've got a lower low, higher high, a lower low, and a lower high. So this now makes a higher high, or a high low, and then a high high. It can also give you confirmation, but the reason why that piqued my interest was because of the ICT entry model. It meets all the requirements.
Okay, I'm gonna have to go back over this video again and watch the requirements, but I got it. I got it. I mean, I see it just from a strat point of view, just because it did take out, it made a lower low, it TTO'd them out, and even though it did come back, now ideally, because that 2 is a very strong shooter, if it were to go up, I would like for it to like maybe inside day first and then go up, but only because that 2 is hard to break to the upside because it ended to the downside. You know what I mean? So
yeah,
that's
I think with ICT as well, it gets you in on a more aggressive early entry because on the SPX move last week, I didn't get in off a Strat principle. I got in using ICT and I got in super early, as you've seen. And then I caught basically, well, not the top, but I nearly caught the top and got it all the way down to the bottom, just off his entry model. If you wanted to be safer, you could use the Strat reversal.
Okay, so that's why they say it's the Strat on steroids, because basically,
steroids,
okay, I get it.
So it's just something to watch the video over again. Any questions, come back and I'll try to help. But it's just personally helped me last week with these entries. And again, eBay's met all the requirements. So if we get an inside bar, a bullish inside bar, and then a do up, then to go along to target all these pivots.
That sounds good. I'm going to add that to the list. For sure.
Maybe we can experiment with it and see what happens during the week if it does what we think it's going to do as well.
eBay is cheap too, so it's something that can be played kind of out the gate depending on what it does. So, I mean, even if it does do a 3-2-2 down or whatever it does, as long as it's not inside, of course. But yeah, it's a good
Yeah.
way to start the week. I actually look at eBay a lot to start the week just because it's a cheapie. So I like that.
If I just draw them demand zones again, let's just see what it's in on the demand zones.
A lot of them have that because of that drop. It does sort of look like an inverse head and shoulders too. So be
Yeah.
interesting to see how Monday goes.
But that's all for me. I did have DDAG, but I've not really looked at it too much. I don't know. I think it came up on one of the scanners. Let's see why. I think I've got it on my radar because it's taken out. If we look left, it's taken out both those two pivots, and again, it meets the ICT entry model. If I draw just draw a broadening formation, it could be bouncing off there, returning back up. So I've got DDAG on my list as well.
What? How can you go to the weekly on that for me, please? Okay, so it's a 2 up, 2 down. What about the 2 week?
2 week. 2 down. So it didn't quite take out that pivot, but it just continued. That's why I've marked it to come down.
Okay.
I think it could go both ways. It's just it's interesting because if it breaks this broadening formation here,
Yeah.
you can see that pivot's been marked there. So you can do a continuation to target the 69s.
Yeah, I like that. Okay.
Yeah. Yeah, that's all from me.
Okay. Sounds good. Well, Kiki, sis, you ready?
Okay. So I just wanted to revisit Qcom from our last study session from last week. So we got in on the 10th, I believe that was the Monday.
Yep.
Targeting this gap here, this mini gap here. And I think we day traded it and got out right here probably.
Yep.
Only for it to continue down. But the reason why I wanted to revisit it is because there's another gap all the way back from I think that's July of 2020. So we zoom all the way out. There's this gap here. We have full time frame continuity down. And so I'm hoping that we get a 3-1-2 and for a continuation back down into this zone here. And this would be like around like $100. So not much more. We're still on the month. We're 2 down so far. On the week, 2 down as well. Be interesting to get a 2-2 continuation down into here. But also what's interesting too, could also get a 3-1-2 up and for us to go back up into this zone to take out that 120 level, but it will really have to push. So it could go either way. Also on the 4 hours, my favorite time frame to look at. We got the rejection off the 20, and then we came back under. So I'm looking to see if we could take out this level first, which is 104, and then just for it to push down, just not much. Or depending on if the market is bullish, or it's reverse and actually take this out and go up this way. So I feel like it's definitely still a good trade. And we definitely got out a little bit too early too as well. Right here we got out. And then only for it to kind of do a 2-1-2 continuation down. So I just want to put that on you guys' radar for like next week. I think it's still a good play for us to get into. And also, I'm looking at HD as well. He finally closed under the EMA. Well, I used the 9. We finally got to close under the 9 EMA. So hopefully I'm looking to see if we get a $10 move down into, I think, like 265. If we could get that. Or being that it's HD, because HD does what it wants sometimes. We could get another $10 move up in the opposite direction. So that would be 285. But again, I'm always watching the 4-hour. I'm not a person that really looks at what's going on the day or all the week. I mainly trade off the 4-hour. So as long as we could stay under these EMAs and everything, I feel like, it's kind of low. There's a little gap there, but that filled it. As long as we could stay under the EMAs, I feel like we could reach 265. If not, we get a reversal and we just go back up and take out 285. So, on the 1-hour. Yep. Looks pretty. It could do it. Get the 2-1-2 down or again reversal. Either way, I feel like it's a good play to watch going in either direction. But we do have full time frame continuity on all time frames to the downside on the hour, 2-hour, 4-hour, the day. So it'll just be interesting to see. But yeah, that's all I got for now. Yeah, that's pretty much it.
I like HD. Honestly, if it does like what most everything, it did fill that gap, but it ran through it so quickly that it may want to come down and iron that out. So
Go back to it.
Yeah, I see exactly what you see. She trained me good, y'all. While she
I
up
mean, it's
here,
hard for me to explain this whole bear thing to people, but yeah.
oh, I know. It's been a while. It's been a while. Oh, while she's up there though, y'all, so we don't have to switch. Did anybody want us to look at any particular tickers? Trust my levels was up. I see you out there. I don't know if you want us to look at anything or Jamal, Kim. I'm not trying to put nobody on the spot. If y'all don't want to say it, you can put it in the chat, or if you don't have nothing, that's okay. But I just thought I would extend the invitation.
Can we look at Coca-Cola, KO?
Ooh, KO. So, I was looking at KO. I'm trying to remember why. I think it was on a week. Can you look at the week for me, please? No, I think it's because you had sent me how those contracts moved really fast.
Oh yeah, it really did. It was kind of interesting. So on Friday, Coca-Cola had $10 contracts, and I think Coca-Cola only moved $1 and a couple of cents, and the contracts went from like $10 to $250. I was just trying to like figure out if it only moved $1, maybe with the IV and the gamma and all that type of stuff, kind of hopefully probably added up, but it's kind of interesting.
And not normal for KO either.
And it's not normal, yeah. Whereas the contract right under it was like $25 and only was 100% on it. So it's like kind of interesting. I don't know why that was. Like it was kind of like discrepancies within the contracts. I don't know.
Well, I know it's
But
a
okay, so what do you want us to see about Coca-Cola?
I know it's a PMG on that week,
Yeah, it is.
and that may be a level of support where um it's a shooter on the week. I mean, she may have just wanted our thoughts. That's a shoot. That's a big old M
Oh,
too.
Yeah, I just wanted your thoughts, and that's a good observation about the shooter on the daily, and just finding support. I just wanted to see which way, just that you think it may go. Do you think it'll go lower? Do you think it'll reject and retest highs before going lower?
I think it needs some corrective activity. It's been going down. That PMG right there is just saying that it does need some. Can you go to the month real quick, please? So we're 2 down. We have not taken out the target. So I mean, to the downside, we could see it go down to, what is that, 50, 52-ish? And that looks like a solid
yeah.
support right there. So if it did drop, I could see it getting to that 52 and having a solid support. But keeping in mind that there is a weekly PMG, so it actually could make a strong move to the upside because of that. But because it's on a weak PMG, it may take a while, obviously, to move. How's your golden look? Yep, you already knew.
I'm up to the 4 hour.
Yep.
I don't never know what's going on in the week. Let me see.
So it's like a textbook rejection right there.
Interesting. It could, knowing Coca-Cola, it likes to run. It does the opposite of what the market is doing. So the market could be falling and this could be running. I think recently they got a downgrade though. I feel like that's why it kind of. But it's in an interesting spot. I will wait to see if it could break above 56 with volume, and then I would take calls up into here. But if it can't, I will play the downside continuation down. Probably the. Let me see.
Can I just add a point as well?
Mm-hmm.
What?
Can I add something to that Coca-Cola analysis?
Yes, please.
Sure.
Yeah. So on the 4 hour, you've got your lower low. It's made a lower high. So if it makes a lower low again, then you can take it as bullish.
Oh, which could be that monthly target if it decides to make another lower low.
Yeah.
And then you can target it to the upside with that PMG, because that's nice.
Okay.
Which I guess, well,
Interesting.
she was saying it doesn't really follow the market, but in case it did and decided to come down to that and then reverse, but I feel like the market is going to get a bullish run probably around midterms or something. So, if it did that and like fell the rest of October, but then November turned around, then I could see that. But yeah, I see what he's saying as far as making that lower low, because we really essentially haven't taken those people out, those stops. So definitely looking for them to do that first, before it really reverses. But yeah, it could definitely. And then the way it's on that 4 hour, the way it's just been rejecting, that's the 8, right? Or your 9?
I use a 9.
Yeah, that's the 9. It's like, well, the last few days it looked like it's trying to struggle a little bit. Because see, before when I'm looking at it, it would reject and then fall. But the last few sessions it's kind of held up a little bit. So yeah, kind of have to see what that does. I like it though. The 4 hour, that could be a nice day trade on Monday if it 322's up, because KO again is a cheap stock. So that's something you can get, like, you always talk about how that's a quick 100%. So like that 322 up, you play in the money and grab it, or play the 322 down.
I definitely think Coca-Cola is good for day trading. You just want to get a quick 100% on your money, it's definitely good for that. But it's interesting. I like it. I might trade it. I like it a lot.
Oh, I'm definitely watching it for that PMG. Even if it doesn't take out all of those stops, just a few of them that's still, you know. If it has, it probably
Also
would need
like,
some type of catalyst for that, like an upgrade or something like that.
mm-hmm.
But it's
It could
definitely
take out like 54. Like go to this level right here. Also, I like the 1 hour to catch reversals. So if you're trading off the 4 hour, you're not gonna always catch the bottom of a reversal. So
that's for sure.
if it can't go up here and take out here, I would continue to trade it down here for a quick in and out, or trade it to here and then get out. So either way, if it can't hold here, then it's definitely gonna go here. If not, with volume, it's gonna go here. We just have to wait and see. It's kind of an interesting spot.
Agreed. Oh, did you see ZS after you told everybody to look out for it?
No, I didn't. Should I look?
I don't know if you want to look, sis.
Oh my
I
God.
literally just looked and I was like, oh, ouch.
Wow.
Yeah.
This is sad.
That's a 2 down, 2 up, 2 down, 1, 2, 2 down. Actually, that was a rev strat, and it took out 1, 2, 3, 4, 5 stops. Like,
Wow, that's crazy.
was that on a scanner or something?
It was on a scanner, and then I was reading something about it was some news article that came out, and it was on the scanner and along with the article. And I'm like, let me just put this out there for everybody's read. But I never even put on my watch list. It's not even there. That is crazy.
So y'all, I just want to just point that out. When Kiki says like watch such and such, sometimes she forget. So somebody watch for, because I forget too
Please,
sometimes. So
somebody
somebody
watch.
just watch, because a lot of
My
times I
mom be all over the
think
place. Wow, that was a crazy drop.
that really was. That was actually, I mean, even if you just did the strat trigger, that was like $30, a $30 move.
Wow, that's
Yeah,
crazy.
so now granted it did move sharp, so, and it took out a lot of stops, so it may be actually good
Right.
for some corrective activity, but yeah.
That sucks.
So does anybody else have any questions? Anything y'all want to ask?
Can Kiki take a look at McDonald's? I'm sorry, I'm eating.
Oh, you good. I actually looked at McDonald's already, but go ahead, Key. You can because I want to hear what you had to say about
I don't
that.
want to repeat. I'll just look at the playback there.
Hello, I'm Yolanda calling on behalf.
Oh, that's funny. Okay. Okay.
What about plug to the downside continuation? The bad news.
They got bad news? Bad news?
They reported that there something about their
Oh, fill the gap. There's a gap here.
Finally.
What do they call it?
Oh, no, right.
The guidance. They got it down, I believe.
Oh, okay. I mean, that thing has been slow bleeding. But
Nothing but twos.
yeah.
Wow.
Slow bleeding though, because that gap I've been looking for the fill for the longest. It's triggered on the month though, so it's still good for more downside, I think. Not the month. It was something I was looking at that it triggered. Maybe it was those. No, I think it was that gap. I was targeting that gap. It filled that gap. So.
Yeah.
Yeah, I think on the 14th they got it down for the next fiscal year or something like that, and that's what clapped them.
Yeah, they still have more range to go on the month, so I definitely think they can still keep coming down.
Everything is red.
Mm-hmm. It's just a slow bleed, but it's definitely a pattern there of lower highs and rejection of the EMAs, low corrective activity, and then comes right back down. But that's what is that on the 4 hour? Some corrective activity
Yeah.
with that 322 up would be nice. Oh, we on ZS.
And
I
the
don't know why.
contract was in. Yeah, I switched back. Sorry.
Oh no, you fine. I was like, wait a minute. That's yeah. No, you fine. That's ZS. But yeah.
Damn it.
Um.
I'm conscious I'll be getting like 2K or something like that because had you gotten when I mentioned it right here, is when I mentioned it and wrote it the whole.
Could have
That's
just
it.
held it.
For a
Yeah.
week.
He would have never got stopped out of that.
Yep. It's crazy. What? Anything else, anybody?
So Trust My Levels wanted to go over SPX.
I've been waiting for this.
You can just call me Trust. That's all. Just go
Trust.
with
There we
Trust.
go. That works. That works. I'll go with that.
Yeah. So, hello everybody. Trust My Level. So, I only trade SPX. That's all I trade. I don't do anything else. It's all SPX. So, yeah, it looks a little complicated, but it's not. I just have everything broken down between the 1 minute, 5 minute. It's supposed to be the 15 over here, 30 minute, hour, and 65 minute. I always have everything up here to let me know what's going on in ES, SPX, NDX, Russell, and Q, because I'm watching the entire market as we're trading, and just seeing what the overall market is doing. And some things that I've noticed, throughout my 9 years of trading so far, is that Russell usually leads where we're going. So Russell is something that I'm always watching to see, because on another screen, I have 4 screens over here. So on another screen, I'm always watching all 4 of the major indices. So Dow, Russell, NASDAQ, and ES. So I have the futures up, the ETF of them. I have all of them so I can see it all, so I can see what's going on. I'm looking for divergence.
Oh my God.
Matter of fact, I can bring that up, but
I'm sorry, y'all.
we'll look at that later. So with SPX, like I said, I only trade that. And then on Friday, let me just go through here real quick. So on Friday, I traded on Tuesday, Wednesday, and Friday. Thursday, I had class, so I couldn't get into it. So on Friday, when we came in, and this is just for broad information. So I have a screen with broad information, then I have a screen with the Fibonacci retracement. And then I have another screen that has bookmap up, because I always want to watch the levels of ES, because we're always looking at the futures and the levels for futures, because since SPX does not have volume, there's no volume on SPX at all. We have to look at ES and SPY to gauge the actual volume. And I think that's where the volume profiles are pulling their information from when they with anything for SPX, because there's no volume actually being traded on SPX. So, all right. So for Friday, we had a gap up, and then we went right above a 2-day broadening formation. So anything you'll see on the screen right now is broadening formations. I have my fibs on this one too, but we gapped up, and then we went immediately to a broadening formation, and went straight through it, and then came right back down below. So that's when I know we tapped it first, went through it, came back below, and then we call these tweezer bars. And when we start seeing tweezer bars, I know that's an immediate time I need to start looking to get into something. And then here on this 5-minute chart here, so the Fibonacci retracements. So I have a fib, and you hear me talking about profit boxes and all that other stuff, and it went inside of my profit box and immediately came back outside of it. I immediately entered that trade right then and there. That there was no question about it. I don't have a hesitation about it. You've gotten to a broad information. You've gotten through the profit box, and then you immediately go down. And with the fibs that I draw, I only have to draw it one time, and then I automatically have the rest of the targets all ready to go. So I know where I'm entering, which was here. I know ahead of time what contract I'm aiming for, because when I tell people with the fibs that we teach, hey, as soon as you hit that profit box, I'm targeting the other side of my fibs. So I'm either going to target these levels that are down here at the bottom, or I can target the 50, I can target the 61.8, whatever you want to do, whatever you can afford is what you should start looking at. So on Friday, boom, we came into the profit box. I immediately took that because I was on the 1 minute at first. And then as soon as that went inside and down, we got into the play. And then we took it down to this 36.25. So from that, there was about a 863% is coming from here down to here. So we took that 863% because then also, I don't know if you can see. Yes, you can see this now. Perfect. So I really watch the contracts. Once I identify what I need to get, I am watching the contract. I don't look at the stock chart anymore. I watch the contracts only because now the contract charts is what's actually making you the money. So watching the stock chart doesn't do anything for me because, okay, how do I know where the stock price is going to be if I get into the options at a certain price? I get into we do a 2-1-2, we break below the 2. What am I targeting? What am I targeting on the options price? So I look here to find the options price to see exactly what I need to target on that. So, and just like you were talking about earlier, looking to the left to see where potential hesitation points are. I'll come in and I'll draw those hesitation points and I'll say, okay, 1341, 1350, $15 area is where we're going to target for these contracts. So, and then on Friday, I got in on those contracts at 140, $1.40, and I took them up to 1350 was the first one. And then he started coming back down and they kept hitting this $4, $3 or whatever, and they run back up to 18. And then it started to bottom out here at this $6, $7, $8 range. And all it did for that next 5 hours was come down because we marked the level. Matter of fact, I'll just put it on here. I don't think I have that one up here. But we marked it at $8 and they kept coming down to 8. They kept coming down to the $8 mark. And then at the $8 mark, where is it at? $8. So we kept coming down to that 8.40 area, popping back up to 18. Can you imagine coming in and trading and saying, okay, I'm just going to get these 3,600 puts. I'm just going to wait till it comes down to this $8 range. It pops up. It takes me to 12. It comes back down to the $8 range. It pops up to 15. It comes back down to the $7, $8 range. It pops back up to 15 again. It pumps back down to the $8 range. Now it pops up to 18. Boom, coming back down to the 8. Now it's popping up to 18. Boom, to the 8. Now it's popping up to 20. So all day long, that's why I watch the contract instead of watching the chart, because I can see where the market folks, because retail traders it's not the retail traders that are pushing all this volume down here. It's the market makers. And the people that are actually trading this heavy are coming down and they're putting all of these contracts into this. And you can start seeing when the volume is spiking, you'll start seeing, and you can use your Strat principles, you can use wherever you want to use on the contract. And that's the biggest thing for me is to watch the contract. Because when I look at the chart, I already see where I'm going on the charts. Then I come over here to make sure that these contracts, and I'm targeting those contracts. So as you can see on here, once we took that, we took it from, let's say you got in at the 140. You say you got real aggressive, and then you came over here and took it. That's 1,200% on that first move, just from 940 up to, and that was 44 minutes for 1,200%. And just say you came in and waited till it came down. Let's say you waited until you got to an 8. You came here and got to waited to the 8. That's another 58% you could have got. Came down here again, waited again. You pop up here, you got another 100% on there. And this is why I trade SPX and SPX only, because it gave you like 7 to 8 100% moves plus that 1,200% move up here on just Friday alone. Not even talking about Tuesday, because Tuesday and Wednesday were days that I traded. And we got 1,600% and 500% on one, 1,600% on another one. And then I skipped Thursday altogether. I missed all of that. And then came back on Friday and got the 863%. So, like I said, just watching these over and over. It's like, I know people, we talk about the quick 100% and all of that. This started off, like for small accounts, this is down at $1. It's at $1.20, and you taking $1.20 and turning it into 1,600. I don't know anybody that's complaining about that at all. Even if you had to take 800 and you turn it into 16, that's still 100%. You come down here and take 720, turn it into 18, 720. You just have to watch the actual, movement. And once it starts moving, Vega is what's making these contracts go crazy because, a lot of people only talk about deltas and how much the delta is adding to the contract, and then they just completely skip Vega because Vega is tied to your implied volatility. Mm-hmm. So if you look at the delta for these $1.20 contracts, you're gonna be like, yeah, I don't want to touch that because it's only like a 12 delta, 13 delta, 15 delta. And you're like, I'm adding 15 cents to the contract. I gotta make a huge move. I don't want that. Then you look at Vega, and then all of a sudden you're like, man, Vega's adding $1.50, $1.80, $3, $4 to the contract per 1% increase in the implied volatility. And then you're like, okay, this starts to get a little interesting because now you're taking a contract from $1 up to $20, up to $19 in a 2-hour period. Yes, SPX moves a lot for that. But then the times that you start getting closer to the money is when it really starts to take off. Because when you start getting close to the money, the contracts are about $1,100, between $1,100 and $1,400, and you got your 50 delta at 0.5. So yeah, it just even for the small accounts, I'm just hey, look at those $12, those 12 deltas, 15 deltas, because those could give you a really good pop for your money. And if you're wrong, you're wrong. You know what I'm saying? And I stopped using trailing stops, and now I use a manual stop. So as you can see down here, you can't really see it. Let me see if I can make that bigger. Yeah, yeah. So I created all of my templates. I'll have different templates for whatever. If I'm playing SPY, I have a template for SPY. I got tight stops. If I only want to come in and just get 40% and 20%, I'm gonna do that. If I just want to have a 3-to-1 ratio, I want 90. I'm gonna risk 30. I'll come in and do that just for trailing stops. But now I'll automatically just set this at 30% for the stop, and it's gonna put the stop in, but it's not a trail stop. And then I can just manually move it up. Because sometimes, we get these wild movements and you don't want to get out to play. I know where that bottom area is, and I'll just be like, okay, let me move it to there. And if it drops below that, I'm out. But if you didn't do that, you just kept popping up to 16, kept popping up to 18, kept popping up to 18, another pop up to 20. And then another thing to let people know, once that move happens in the morning, there's another thing. You want to start adding the contracts to your chart. If you're using TOS, start adding the contracts to your chart. So when you go to TOS, you'll have a option that says show orders, because you want to know where you have to go to get to the target that you want to get to. Some people come in the morning and say, I want 1,000%. They have zero clue on how far the stock has to move to get your 1,000%. So when I click the order here, boom, it'll come up on the other screen and say, hey, you want to get 1,000%? Okay, it's going to put a red line on my screen and say you have to get to here to get to. You have to get to here to get to the 1,000%. Your stop loss is at this area, so if it pops above that, you can visually see because it's doing all the calculations for you. So it's calculating delta for you. It's adding the theta. It's subtracting the theta for you. It's telling you all the different things that you need in one line, so you don't have to go and figure it out yourself and try to calculate, oh, it's a 50 delta, it moves $10, okay, I'm gonna get 5, but you didn't account for Vega, you didn't account for theta, you didn't account for rho, and because rho is important to us right now too because of the interest rates. So every time that they announce interest rates, now you have to calculate rho into your contracts, the RHO, and a lot of people don't even pay attention to that, and that's just making the contracts more expensive as each day and each time that they raise any of the interest rates. So pay attention to rho, because rho is what is something that's also being done right now. So again, we came in, got that pop up, it's a profit box, boom, targeted this other side, and after that, it's done. Now, what I was just saying about the contract, once the contract makes the move in the morning, a lot of people try to hold on to those contracts. The issue with holding on to the contracts is that you can make that same move. Let's say SPX drops $40. It drops $40, boom, you move up here, you get from $1.20 up to 16. The rest of the day, nothing came up between 10:24 and 12 o'clock. Yeah, okay, 12 o'clock, I give you that. After 12, nothing happened that was going to get you back up to that $19 until the end of the day. when it made its move at the end of the day. The rest of the day, you have lost money. If you held that contract for the whole day, especially if it's 0 day, you are losing money because even with those moves, it'll come down here, it'll pop back up to 16. It's not making it back up to where you were in the morning at 12 o'clock, at 10 o'clock, and then it comes back down. It still doesn't make it back up there. And now you're like, how come it's, because even in these areas right here, we were at low of day in these areas over here, and it still didn't take out what happened at 12 o'clock. So the price of the stock was higher at 12, and we are at lower day in these areas, and we never reached that area again. So and TOS does that calculation for you so that you can see it on your screen. So then you'll start seeing when theta is starting to chump away because that line is going to move up, telling you, hey, you're going to have to. The stock price now has to move this much further for you to get to that target price on your contract. And then if you let's say we had a drop, we're in puts, and it's a pop up and then drop. Now you're going to see that red line tick down further, telling you, hey, it took away this amount of your contracts because we popped up and dropped. Your contract is no longer worth the same. Now we have to move that much lower for you to get the same price that you wanted, the same price target on the contract. So that's another piece of advice that I, try to get people, just like get these contracts on your screen because this is what's making you the money. The stock chart is not making you the money. This is where your money is coming from. So pay attention to the thing that your money is coming from so that you can actually, know where you're going and do your resistance and supports and all that other stuff from here. Find your gaps and fair value gaps and all that. Find that on the contract because your contract is what's paying you. And then you can start noticing is that when you get to certain areas, there is resistance at certain areas on the contract. And then when you start approaching those areas, you're like, do I want to hold this contract past this? No, I don't, because every single time it's gotten to that area, if I came over here and drew this, and I'm like, every time it's gotten here, it's popped up, came back down. Came up here, tried to get to it, popped up to it again, came back down. Pop above it, down. Above it, down. Get over here again, immediately, 2 candles in, it's down below. Do I want to hold that contract trying to get to 19? No, I'm targeting 1675 if it pops back down here every single time. Because as soon as it pops there and I put my contract there, boom, I'm out the contract. I can wait, I can re-up, come right back down, boom, take it again. Unless something major happens, we end up trading in the same range. And this happens on most Fridays because there's a concept that's called pinning. And what pinning is that options and the market makers, whatever the most traded contract is for the week or the day, it ends up taking the price ends up naturally being attracted to that area. So in my mind, I'm like, okay, let's find that area and boom. Okay, let's get these 3,600. If that's the naturally attracted area, let's get it. Because then at $1.20, it's going back down. It pops up, it does its thing. Okay, we're trying to get back 3,600. I don't know if that correlates to the volume profiles and all of that stuff, but at the same time, I just know that is a phenomenon. If you look it up and you start just reading about pinning, and then even with the volume profiles, read about there are certain patterns on the volume profile. They have a P pattern, they have a D pattern, they have a B as in Bravo pattern, and those mean different things. So, if you're going to use them, make sure you dig deeper. Go into those rabbit holes about the volume profiles. Go into the rabbit holes about the contracts. Go into the rabbit holes about the theoretical, because I have them up here, the theoretical options price. And, it tries to calculate everything so that you can start seeing once you start, you got to read more about them. But there's a lot more to this game, than, a lot of people want to get into. But just get to these contracts, learn the contracts, read the contracts, analyze the contracts, mark your levels on the contracts so you know where you're going. All right, I'm done.
All right, I'm done. I love that. Thank you. Dropping gems.
Wait.
Uh-oh.
Wait.
I knew you had a question.
Yeah, he said all that stuff and then was going to just leave. First and foremost, where can I go to?
Oh, man.
Yes. Where can I go to get a full synopsis of everything that you just said and more because I've always liked the way you traded, so I need more of this. Where can I go get more of this?
So right now, this is a collection of all the knowledge I've had over the 9 years. Mm-hmm. And I try to spew that out because I can talk for 6 hours, and we've had Zooms that's been 6 hours long, And we've gone through trying to dump everything in my brain, and then we still got 18 more hours to go. So, but yeah, this is it's a compilation, and there's other stuff that I use too at the same time. So, because I'm watching market volume, I'm not just watching the volume of a particular stock. I want to see what's going on in the total market of NYSE. I want to see what's going on in AMX. What's the total volume of that? Dude, how many stocks are going up? How many stocks are going down? What you got going on? So there's a lot of stuff that's going to it, and we miss that because we start falling into these little pockets of areas of people that are like, oh, this is better than this is better than that. Mm-hmm. I try to get a combination of everything and move with it and take whatever I can and go with it. Mm-hmm. So and just like RSI and MACD and all of that, we stop usually at oversold and overbought. But then we forget that RSI is just telling us, hey, boom, this candle is below the previous candle. That's what moves the RSI. This candle right here is below the previous 14 candles. Especially if you're using the 14 RSI, you can change it to the 2 RSI. There's a 2 RSI strategy that's out there. There's a 14 RSI, which is what most people use. And MACD, what is it telling you? Hey, this candle or these moving averages, they're separating and getting further away. That's what drives the histogram. The histogram gets taller as the moving averages get further away. And when you hear that, then you go back and you're like, oh, that's what it's telling you. It's telling me that, hey, that 9 or what you use, 9 and 16 or something like that, they're starting to spread away. But, we normally, everybody gets a surface knowledge of it. We get that mile wide information and go an inch deep. And I am the one that's going, a mile deep, 25 miles wide, and just trying to find everything about everything so that I know it. I mean, because I used the moving averages back in the day. I used the moving averages. I used all of that. Bollinger Bands, all of that. But I can still see them now. I can see it on my head when I look at a candlestick and see what's going on. And then the Strat came, and I was like, okay, let me see what he's talking about. But and at the same time, I was like, oh, we're already using a lot of these concepts. They just called a different thing. ICT came around. Mm-hmm. We're using the same concepts. Boom. It's just something different that came around. Elliott Wave come around. Everything is built around Fibonacci retracements. Mm-hmm. So any strategy that comes out these days, everything is built around Fibonacci retracement. So when anybody tells you like the Sarah 50% rule, when I first approached her about that, I was like, you do know you're using Fibonacci retracement. She's like, no, I didn't know that. And then more people started to come to. She's like, oh, okay. So the person that taught me this, I guess he was a Fib person that taught me how to use this particular thing, and it's only being drawn on one candle. But there's some limitations to it, and it's still a good thing at the same time. That's what you're talking about earlier when the 50% happens, how it's sometimes reversed because there's another level right behind it. That 61.8 is right behind it. That 61.8 level is a very strong level. The 78.6 is there. All of those levels are there, and you got to remember, the people that are trading SPX and all of these stocks, they're all being traded by computers. So these Fibonacci retracements are giving you a glimpse into the computer's programming to see where is this target. When they gap up, they're gapping up for a target. In my head, I'm like, okay, let me find that target. I need to find the target that they're gapping to. Then I can start targeting the other side of where they targeted, so I know exactly what contracts I need to put. And nowadays, I'm getting these 3,700, 3,600, these contracts that are in the money to find out so I can get whatever I need to get as soon as possible. So, like I said, this is a collection of everything, and even the other groups that we've been in. This is the same stuff I've been talking about for the past 4 years. Yeah. So, yeah, it's all scattered in my brain, but I try to put it together real quick.
The profit boxes, dude. That's what I haven't heard that before. So that's why I specifically like your Fib stuff. Like I would really want to zone in on that and get my Fib game up. Like I know you got the YouTube.
Yeah, I was just gonna say that he was posting the videos on YouTube, but I know you have a YouTube where you post daily SPY videos, right, Trust?
Yeah, so and I'm in medical school also. So, sometimes I'm in class during the morning, so I can't do the videos. But yeah, I've been posting them there, and I'm starting to do more recaps also because sometimes even in the videos in the morning, a lot of people don't have a chance to watch them because I don't chart at night. I don't chart any other time other than coming in and drawing my Fib in the morning. And I draw that Fib in the morning, I'm done. So I don't have to draw anything else. I don't need to analyze anything else. and then boom, I could get my profit box, see where are you taking it up, and then where are you going to take it down. So, and that's what I'm looking at.
All right. Yeah, I'm gonna keep spying on you and give some more information.
Can I ask a question?
Yes, go ahead.
So as a UK user, I can't use Thinkorswim. I can use it for scanning and whatever else, but I can't use it to place trades. So I use a different platform. With how you showed us with the contracts, are you still able to bring that up if you're not placing an actual trade via TOS?
Yes. So all I need to do, if you're using, can you use TOS to chart?
Yes.
Oh yeah. So I can just come right here, click on the option, type in SPX, and SPX, boom. Oops. Oh,
Did you screen on?
All right.
Oops. Sorry. My bad. Let me bring it back up. Screen. And then screens. Screen 4. Can you see me now?
Yeah.
Yep.
We're good?
Yep, we can see.
Yeah.
Okay.
Yeah.
All right. So all I need to do is come up here and then click the arrow that's there, come over to options. SPX. It's not going to come. I don't think it's going to come up right now. Let's see. They might not come. Yeah, there we go. And then I can just bring up whatever contract right here. And I click on the contract, boom. Now I have the contract on my screen whenever it loads. And then I'll have that contract right there. So now I can do whatever I need. If I need to draw fibs on it, if I need to do something here, I can come over here and draw that. And I can know where my targets are.
Mm-hmm.
So.
But do you still enter off the chart, and then once you've done your entry, you negate the chart, and then you come and look solely at the contract?
So I can't say that I negate it because I have 4 screens, and each screen has certain things on it. One screen has my entire. I'll have this up where I have ES, NQ, Russell, Dow. And then I have the ETFs of all of those, and I'm watching all of these. I'll just turn to the right, boom, I got that. Another screen has Bookmap. I got Bookmap up, and I ended up getting the full version of Bookmap, the standalone version, because the one on TOS, it's missing a lot of stuff. So I got that, and I'm able to see hidden. So they have an add-on that you can see the hidden orders that are starting to build. So then I know if I'm coming down to a level that they have called icebergs. And it can show you, it shows you the stop hunts. It shows you when those market makers are building orders that are not going through the exchanges, the normal exchanges, so they can see it. But they see them coming through CMOE, or they see them coming through the rhythmic data area. And I can start saying, I probably need to take this off the table and go in the opposite direction because they're building a position over a wide range of prices. And it starts to pick up on that. And it's like, oh, you might have a reversal coming because of these orders that are coming in. And then I'm always on Bookmap, I have Apple, Microsoft, Tesla. And those give me those indications also that, hey, if Apple is dropping, Tesla is dropping, Microsoft is dropping, you got 20% of SPY dropping, you got 20% of a NASDAQ dropping, which way is it probably going to go? And with this one, with this grid right here, I'm watching for divergence. And like I said, Russell is usually the one that gives us an indication of potential direction. Because if I see this going green, then I see Dow red, and I see NQ red, and I see ES red, I'm like, okay, Russell is probably trying to give us a indication of, hey, the market might be going in the opposite direction. And that's what the divergence is, because then you'll start seeing Russell go green, and I see Dow go green. I'm like, okay, all right, Dow is starting to go green. But then you'll see ES over here, SP 500, they're just in la-la land. It's just chilling. It's just like, oh, I don't know what's going on. Look at the stars. Oh, look at that. Oh. And then you'll see NASDAQ jump up. It'll be green. And then all of a sudden, ES is like, oh, my gosh, I think everybody left me. And then it'll go up green and then follow what everybody else is doing. But for the most part, most of the days, they're all the same color, except right now. They're making new highs. Is it making a new high? Is it making a new low? When I start seeing that, that's all combined into the divergence that I'm looking at.
Okay.
I know it's a lot.
So it's just interesting because I actually said, even though I slapped SPX on Friday, I personally noticed that the contract was losing value, and I couldn't figure out why. Obviously, it was peaking and it was coming down and peaking and coming down. But from what you just said, makes perfect sense, because obviously in the morning it made that move, and then for the rest of the day it never got to where I wanted it to go back to. So that makes perfect sense now.
Right, because every time it pulls back on you, you're losing value. It pulls down like your inputs. It pushes up. All of a sudden now it just come down to $4. Now it's going to pop back up, and it's never going to reach that same value unless you have a move plus like $10 more to get you back to that $20 area. So holding contracts makes you lose money, especially if you got to like $16. You get on out of that, unless it was Thursday when people took contracts from 90 cents up to $55. So, yeah.
Okay, thanks for that.
Mm-hmm.
Yes, thank you for that. For sure. I still say that Thinkorswim is like the best with analyzing stuff, and you definitely showed me something new with analyzing the contracts, especially watching them more, because I definitely watch the chart, so it does make sense to also have that contract up and see how it loses.
Especially if you're in.
Yeah, I mean, and you can chart it just like you chart your regular stuff, watching the actual stock. So yeah, I really like that idea. I mean, and I watch premiums too, so it makes sense to do this. To actually chart it out, not just watch like the value of the premiums or the volume or anything like that. Like go deeper into it, like you said. It's so much more than just the surface of your contracts.
And a lot of people make money just with the surface information.
Yep.
It's, sometimes I like to see what's going on the inside. I want to see, hey, open this hood, show me what's going on down here. All right, now I understand what you're doing. And then, the analyze tab and going through all the tabs that are in TOS, because there's a wealth of information that is there, and is there for you to digest and plan your trades. And that's what I see a lot of in the retail world. Nobody's really planning the trades. We plan, hey, I see this level. I was breaking here. If we break above this, got you. But we don't plan when it breaks here, the contract is going to be worth X, Y, and Z. And once we get to, let's say we got a pivot machine gun. Once it finishes that pivot machine gun, it's going to be worth $18. If it's in the middle of the pivot machine gun, it's going to be worth $9. I don't see that happening. So, I try to put that out anytime I get a chance to talk to anybody. I try to put that out, even if it's a small group, put that out just to put some little gems in the head, so that, they start looking like, oh, there's a different way to understand what these contracts are doing. Because a lot of people don't, they're holding contracts all day. Like, I've been in this contract all day, 5 hours, boom. I made 100%, but you had 500 in the beginning. You know what I mean? Mm-hmm. You had 500 in the morning when it made its first initial drop, but then you ended with 100 because you held it all day. So, I just want to get that in there and just get people to start thinking about it.
Well, I appreciate that for sure. Well, I guess, wow, it is 3:00. Y'all, this has been awesome. We ran 2 hours today just talking. I love it. Coming together for a study session and all of that. I appreciate y'all.